What would happen if another stock market crash happened? It would likely begin quietly, just a sharp drop at market open, brushed off as a bad day. But within hours, the losses would accelerate. Major indexes would plunge, trading halts triggering again and again as panic spreads faster than explanations. Financial news would shift from cautious analysis to urgent non-stop coverage, with analysts struggling to explain what's driving the scoot in real time. By midday, fear would take over. Investors, both large institutions and everyday people, would rush to sell, overwhelming the system. Retirement accounts would shrink by the minute. Apps would lag or crash under the pressure of millions trying to access their money at once. Rumors would spread about failing banks, collapsing funds, hidden debt, and no one would be sure what's real. As the crash deepens, the effects would spill into the real world. Companies would freeze hiring, then announce layoffs. Businesses reliant on credit would suddenly find it gone. Banks would tighten lending or shut it off entirely, trying to protect themselves. Governments and central banks would step in with emergency statements, interest rate cuts, or bailout talks. But confidence, once shaken, would be hard to restore. By the end of the day, the emotional impact would hit hardest. People would refresh their accounts in disbelief, watching years of savings vanish. News of billion-dollar losses would contrast sharply with individuals worrying about rent, food, and job security. The crash wouldn't just be numbers on a screen anymore. It would become a psychological shock, a sudden loss of stability. And in the days that follow, the real consequences would unfold. A slowing economy, rising unemployment, and a lingering sense of uncertainty. Because a market crash doesn't just break financial systems, it breaks trust, and that takes far longer to rebuild.